Welcome to my channel. I'm Mike and this channel is about my journey going from $10,000 of my own money to $80,000 in 3 years. In this video, we'll go over this week's trades, my current losing positions, and how I made $100 in less than 1 hour trading SPY calls. Let's get into the trades. As you might have noticed, this week the market had a correction and all trading and investing groups went crazy.
The stock market is crashing. The end is near.
I don't believe in a stock market crash right now, but I do believe in corrections from time to time. SPY has fallen 4% from its peak 1 week ago. From my analysis, SPY could still drop to the 360 area without an actual panic, just making a correction. Although the market was dropping this week, I still managed to make $600 in profits. RKT was my biggest winner this week, smashing their earnings report. Unfortunately, I was caught with an AMD put at $88 strike, but I've managed to roll this put up until the 19th of March, and also I decreased my strike price with $1. My current position on AMD is at strike price $87 instead of $88. Basically, I reduced $100 of my total risk for this trade and still I have received $50. At the start of the week, I entered 4 trades with expiration on the 5th of March. I received around $500 in premium for these trades. I also added my AMD roll as my 5th trade of the week. Dropbox, for example, I managed to open on Monday and close it on Friday with more than 50% of profits. Almost all of my current open trades are trading below their strike price. This is slightly uncomfortable, but I expect the market to come around. If by the end of the contracts I'm still below the strike price, I will roll the contracts for a future expiration date. Let's look at the charts I traded this week and what is my watch list for next week. My first trade of the week was FSLY. I sold one contract for the 5th of March at $70 strike. I received $110 in premium. I chose FSLY due to the market overreaction on earnings. They beat on revenue and profit expectations, but had an outlook that was not in line with those expectations. If you look at the last 12 months, FSLY had more than one overreaction to either news or earnings. I expected the 200 moving average to act as a support, but due to overall market panic, FSLY moved towards my strike price quite fast. I'll be waiting to either close the contract on Wednesday or Thursday or roll it for another week. My second trade was open on Monday and closed on Friday for 50% of profit. I sold 3 Dropbox contracts at $22 strike for $165 in premium. If you look at the chart, Dropbox did not follow overall market trend. Also, the $22 area seems to be a powerful support level. I closed the trade in order to decrease my overall risk since all of my other trades have a total of $2,300 unrealized loss. I also sold 2 Uber contracts at $53 strike for $122 in premium. I chose this strike because it was below 0.3 delta and the premium was higher than 1% of the strike. Uber had no support at $53. I would rate this trade a 3 out of 5 since my portfolio would have looked better without it. Again, I'm not thinking of closing any of these trades in the red. If the market is not bouncing, I will roll them all. Final trades of the week were on AMD. I entered a new position with one contract at $85 strike for $139 in premium, and also I rolled the $88 put to an $87 put with expiration on the 19th of March. Since the market is selling off, I started looking for other stocks to trade for my watch list. Activision Blizzard is setting up nicely. If it breaks $98, I'll be looking to sell contracts at $95 strike price. This doesn't mean I will actually do it. Activision Blizzard is not a volatile stock, so the premium to strike ratio might not be appealing. Bearing is a stock I've been watching for the past 2 weeks to find a trade. Since it has a high price for my portfolio and I can't sell naked puts on it, I'm looking for an advanced strategy. Haven't decided yet on the strategy, but I'm still looking. I like the stock above $200 and I believe it can make new 52-week highs with the right news and appropriate market sentiment. Beyond Meat is another stock I'm watching. They had earnings and didn't flop. I'm looking to sell puts somewhere around $135 or $130 area. My only problem with Beyond Meat is actually my broker, Interactive Brokers. They are requesting a higher than normal margin rate for such a trade. We'll see how this develops in the next weeks. DraftKings is a company I really like and I'm watching it every week. Unfortunately, I don't have a support level which allows me to sell put contracts for a premium that is 1% higher than the strike price. I'll continue watching it if it breaks $65 or bounces around $60. These are just some of the stocks I'm watching. If you want more of my watch list, leave a comment down below. Also, let me know whether you are looking at these stocks or have different ones in mind. This week I decided to not enter any more short puts since most of my positions are in the red. In lack of better things to do, I decided to make an experiment. I traded some long call contracts on SPY.
What?
For the ones who asked, what is SPY? SPY is the SPDR ETF for the S&P 500 and has the most traded option chain on the US stock market. SPY has contracts expiring on Monday, Wednesday and Friday. This makes the option chain well suited for both day trading and swing trading. The perks of trading options instead of shares on SPY are the reduced risk and reduced cash requirements. As you can see here, I bought one SPY call for $196 at 385 strike price. The delta on this contract is approximately 0.66. That means I'm trading SPY the same way I would trade with 66 shares of SPY. You can see the maths here. As you can see, it costs nearly $25,000. Instead, I bought a call worth $196. I sold my contract for $232, making a profit of $34 in 4 minutes. That's a 17% gain. If we compare this to the 66 shares trade, you can see the numbers here. You would get a $55 profit in the same 4 minutes. That's a 0.2% profit. I repeat, that's a 0.2% profit. Before this trade, I had a similar one.
Another one. Another one. Another one.
Also a 4-minute trade on SPY calls, but this time I had the $384 strike price for which I paid $294. I managed to close the contract for $347, making a $66 profit. If you look at the overall chart for the day, I left approximately $600 on the table. But the goal for trading is sticking to the plan. Don't chase money in trading. Chase your goals instead. In total, I made $100 in less than 1 hour of trading. As you can see, day trading options instead of shares might be a more lucrative business. Now, what are the risks? To lose money. Since I was trading SPY contracts in their last day till expiration, the time decay was extremely high. So, if SPY would have gone the opposite way, I would have lost maybe 50% of that amount in the same 4-minute span. What should you remember from this experiment I made? Number 1. Trading options is risky. You can lose all the money in a matter of minutes. 2. Trading options might be an alternative to trading shares, especially if you don't have the capital for it. 3. When you buy or sell option contracts, you are not forced in any way to keep the contracts till expiration. You can sell your contracts anytime, depending on your profits or loss. And 4, time decay increases dramatically the sooner the contract expires. If you want me to go in depth on how to choose contract expiration dates and deltas for day trading or swing trading, please leave a comment down below. I will share my thoughts with you, and also I'll make more experiments like the one I did this week. Thank you for sticking with me till this point. If you enjoyed the video, please smash the like button. Each like matters. Don't forget to subscribe and click the notification bell to find out when I post new videos. Thank you and have a great trading week.